Happy Thursday out there, Team 42. It's your skipper here, Darius Dale, to present our macro minute for Thursday, January 11th, 2024. As always, we'll start with the executive summary from today's leadoff morning note. If you would like the analysis supporting these conclusions, as well as what to do about them in your portfolio, you need to be a client at 42 Macro. So we'll start with today's key macro event, which is the December CPI report indicates immaculate disinflation persists in the U.S. economy. The nuance is that despite the upside surprises to the year-over-year rates of headline and core CPI, the December CPI report indicates immaculate disinflation persists in the U.S. economy. Immaculate disinflation is supportive of the soft landing consensus that is embedded across asset market valuations and underpinning the current Goldilocks top-down market regime. From a market implication standpoint, emergent signs of sticky inflation persist, however, and support our view that the last mile of disinflation required for the Fed to achieve its price stability mandate will be difficult to traverse in the absence of recession. Moreover, either the risk of either a no landing or a hard landing has not gone away, and we believe those probabilities will begin to rise again at some point in 2024 and perpetuate a phased transition to a risk-off top-down market regime in the process, which would be inflation or deflation. Fortuitously, neither our quantitative risk management signals nor qualitative research suggest that transition is imminent. Rather than guess and dramatically underperform like most investors that are overly reliant upon predictions to manage risk, we will report when one or both of those independent processes signal imminence in real time. We'll transition to my 42 macro dashboard here, getting an overbought signal here on our friend Ethereum. So the market is starting to chase Ethereum, expecting some movement there on the exchange traded product front there, following the approval of the Bitcoin spot ETFs yesterday afternoon. Those began trading today. We'll see who kind of starts to take market share in the coming days and weeks. We also got a buy signal here. It's at the oversold signal here in DBC. That's the broad commodity basket here. So commodities have been hard for sale here as the market is priced in Goldilocks. The demand for commodities amongst market participants as an investment exposure has declined. Because again, you're getting signs of immaculate disinflation now. This could be the end of that process, and we'll report when something amongst our quantitative risk management signals obviously changes to support either the no landing or soft land or hard landing scenarios. But for now, the market continues to bet on a soft landing, and the soft landing continues to be the general takeaways that we continue to observe in the qualitative data that we're analyzing daily. Transitioning to my 42 macro aware community, our 42 macro aware community, our Team 40 Global Team 42 community. We're getting a question on KISS portfolio rebalancing and tax-free retirement accounts. How often does Darius recommend rebalancing the portfolio? For example, BitTo can move fast on any given day. How often should the allocation be rebalanced? Daily, monthly, quarterly, yearly, or upon asset allocation changes recommended by the KISS portfolio construction process by the 42 macro team. So I don't think there's a one-size-fits-all answer here. For something like rebalancing. Rebalancing is really just a function of how often you want to be in front of your computer screens monitoring the exposures in the account. I personally use the KISS portfolio construction process to manage my liquid net worth, and I rebalance every time we have a change in the process, which is, recently has not been that often. It's been about 5 or 6 weeks since we had the last time we actually had a change in the actual allocation. So, certainly getting to the point where rebalancing is necessary. But the reality is, again, this is a personal question, really. It's really just about how often you want to rebalance your portfolio and be in front of your screens. But, generally speaking, it's probably a good, it's probably the best idea to rebalance every Monday after you get the around the horn report, particularly when you've seen big moves in and around the exposures in the featured in the process. And again, by the way, I keep getting questions about this. Certainly make sure you're reviewing my responses to subscriber questions before you post a question, because it's 9 times out of 10, if you have a question, someone in the communities also had the same question recently. And the reality is, with respect to KISS, it's very customizable. All the information you need to execute a customized version of KISS is published every day in the leadoff morning note and every week in the around the horn. And so in terms of, you need the VAM signal to execute the bottom-up risk management overlay per ETF, and you need the weather model signal for corresponding asset class to execute the top-down risk management overlay per corresponding asset class. And the reality is those overlays are the secret sauce of KISS. That's what makes KISS a valuable process, both in terms of outperforming 60/40, but also outperforming a version of KISS without those overlays from a risk management, volatility, and drawdown statistic standpoint. So, definitely this is a very powerful process. Obviously, many, thousands of you guys are implementing KISS, and we appreciate that. And we're just gonna, keep knocking wood, keep executing the process. So we'll wrap it up there. Darius Dale presenting our macro minute for Thursday, January 11th, 2024. Everyone have a wonderful day. Best of luck out there. We'll catch you back here tomorrow. Cheers.